What's up, everyone? It's Kadi with Money Vesting. Welcome on board for our big inflation live stream. This is it. Today's the day. Big numbers coming out in about under 20 minutes. So if you guys can hear me, see me, just let me know in the live chat. Just want to make sure that everything is working well. Just give me a thumbs up if if the audio and the video is working well. And we are good to go. We are ready. So QQQ is pushing higher a little bit. It's up over 70 basis points right now. We've got the SPY pushing up 71 basis points, and we've got the 10-year yields coming down about 1.67% right now. And the dollar index is slightly down close to 0.5%. So I've got all four things. We're going to be paying attention to the dollar, the yields, and of course the markets as well, equities, so both the NASDAQ and the S&P 500 as well. And we're all set. So I already did a video going over the Excel spreadsheet and where the consensus is. So these are the prior numbers, again sitting at no change from the month of July. 8.5% is that number from last month on a year-over-year basis. And then core went up 0.3%, and right now it's sitting at 5.9%. And this is right here is going to be the consensus. Headline CPI expected to decline by 0.1% month over month, and for us to come down to 8.1%, and core to increase 0.3%, and for us to go up from 5.9 to 6.3%. So again, I pointed out my bear case, my base case, my optimistic, and my very bullish case. So we'll see what ends up happening in about 17 minutes or so. And all right, let's see. And let's just take a look at the volatility as well. So the VIX here is slightly down about 34 to 35 basis points, so not making huge moves. And oil is on its way back higher. So it's back over $89 a barrel. So it is up over 1.2% at the moment. Definitely pushing higher. And Bitcoin just hovering around 22,600, although it is seeing some nice greens. It is pushing higher. That's good to see. And Ethereum also has been pushing higher prior to the merge happening on the 15th. And right now it's up to 1750. So definitely kind of rebounding a little bit from the sellout from yesterday. So bouncing off of that $1,700 levels. So let's see what the expectations are from the inflation numbers today. So again, make sure that you also vote for the markets. Right now we have 61% people expecting the markets to be green today, 32% expecting the markets to be red, and only 7% flat. So definitely majority of the people expecting the markets to be very green. Today we do have some stocks also pushing higher. I mean, Tesla's up 63 basis points, so back up to $306. We got Nvidia up over 1%, up to 146. Apple had a very strong day yesterday. And pre-market, it is pushing up over 70 basis points, so almost at 165 now. And we got AMD also pushing up over 0.5% right now. So, all right, let's see here. Let's take a look. I will be very surprised if CPI comes in below 8.4%. I'm calling it now CPI to come in at 8.9%. Okay. Definitely very much on the upside here. That would be very much a bear case for CPI. So headline. Again, I'm a little bit more in line with consensus to optimistic case because of, all the things we've talked about. So commodity prices rolling over. The only thing is going to be that core inflation piece, right? The core is what's going to really be the big driver, and more specifically the rents, shelter. That's what I'm going to be focused on to see. And then, of course, food prices. Food prices, according to some of the other analysts, was that food prices have been selling off. They've been coming down. But, from what I've seen, I think food prices have been going higher. So, again, it's going to be very interesting in about 15 minutes or so. Copper moving higher now, but copper has been selling off quite a bit from the last couple months here. Oscar says, come on, Money Vesting, channel your inner Bury, get more bearish. Well, I'm really just, looking at the data, right? I mean, obviously, I'm looking at the valuations. I'm looking at different, economic data, technical fundamental data to really better estimate whether the risk reward is appropriate at these levels or not, right? That's really the bottom line here. Obviously, there's no point always being bullish or always being bearish. It's just different strategies at different times and trying to get a good understanding on how the fundamentals, the macros, and the technicals kind of line up. So yeah, that is what I'm going to say. So I see 7.8%. Really, oil has come down, but not as much as last month. Well, we'll definitely get lower before going back up, in my opinion. Yes, so winter is also coming up. So definitely, yeah, and caddies fair values can't get any lower. That's true. I mean, that's pretty much a good representation of how we want good deals on individual stocks, and fair values are obviously a lot lower than where the prices are trading at. So going over to the actual the CME FedWatch tool. So right now we've got 86% ahead of the meeting. So this was yesterday. It was over 90%. So right now we're already starting to see a little bit of a pullback in the interest rate expectations. So now we're down to 86%, expecting the Fed to raise rates by 75 basis points, and then only 14% expecting the Fed to raise rates by 50 basis points. And this, again, is going to be where the release comes in. We'll listen in on CNBC as well as they report those numbers. And of course, we'll kind of check out the PDF as well. This is going to be for July, where we actually didn't see any gain. And then we are starting to kind of come down on the headline basis, and core is expected to kind of push higher once again. From last month, energy obviously was the big change down. So July, we had energy prices come down 4.6% on aggregate. Fuel oil was down over 11%. Gasoline was down over 7%. And then again, looking at the gas prices on a AAA basis, average prices, they have come down. But food was up 1.1%, and it's up almost 11% on a year-over-year basis. So food, again, is going to be something that's a wild card. And then other things such as apparel, shelter prices were up 0.5%. Year-over-year, they're up 5.7%. And transportation services up 9.2% year over year, but they were down 0.5% on in the last month. So that's where we are for inflation. So we should do a poll for inflation. I think we should just call this as a 62%, 302 votes. I think we're pretty good with this one. Most people expecting the markets to be very green, so that's good. And then inflation today. We did a poll similar yesterday. I think most people were, I forgot what the number was, what the result was, but. Yes, pull it up now. Let's do an audio check. I'll do that in a minute. I'll do that when we are under 10 minutes. I'll do an audio check here. So inflation today. Let's just do our own. I'm gonna put bear case, base case, optimistic case, and then bull case. Right. So remember, this is the consensus. I'm gonna put those 4 options up there. Base case is your expectation that inflation is gonna meet. Inflation is going to meet expectations. It's going to be pretty much in line with consensus. Bear case is going to be that it's going to be worse than what these estimates were. Optimistic case that it's going to be slightly better, or bull case it's going to be a lot better, right? Those are pretty much the 4 options. So we'll just do that. Base case, bear case. This should be interesting. Optimistic, and then bullish or bull case. All right. So let's do this. And 10-year yields are currently sliding down a little bit over 1.6%. I know somebody was asking about that. So 10-year yields are falling near 3.27%. So they're just a little bit over 3.3% at the moment. So Mohammed Kadi, do you think the market will go back to June lows? Interesting. There was a survey from Deutsche Bank that was released today that pretty much said that more than 52% people said that the markets will hit the low either end of this year or by early next year. So that was a survey that was done by Deutsche Bank from market participants, investors, and all that stuff. And surprisingly so, they were more bearish, and people were expecting that the more lows are coming for the market. So we'll find out soon enough. But really, I think it depends on how severe these things get. Right now, we're kind of like in that transition phase where the Fed is raising rates and inflation is showing signs of improvement. We'll find out today in about 10 minutes or so. But again, it's going to be dependent on the recession as well, how severe it gets to, and there's a lot of other variables that we're looking at. So the question whether we get down to our June lows depends on a lot of things that we need to still understand about the economy, how much the Fed is going to raise rates, how good is inflation, things like that. So, if inflation comes in really bad today, if we accelerate on all four fronts, if CPI headline core month over month, year over year continues to push higher, then, obviously that's not going to be great for the markets, because the Fed is going to double down on their rate hikes despite a weakening economy. And, you have to understand, lots of people have made many calls. I mean, Ray Dalio has talked about stagflation. That's an environment where inflation is going to be high, growth is going to be very subpar, and unemployment is going to be also high. So stagflation is going to be that environment with elevated inflation. But Peter Schiff's talked about hyperinflation, and then we've got on the deflation camp, we've got Cathie Wood and Elon Musk calling for deflation in the economy moving forward. So again, there's a lot of different opinions and perspectives. It should be really interesting right now. All right, so yeah, if it went down that much in June, it could easily go down a little bit more if negative catalysts emerge. Again, Oscar says, bull and optimistic, but no bear and double bear. Well, we just put it as a base case, right? I think base case would be more so like a bear case. So a video with Ray Dalio where he's saying he see inflation at 4% a year from now. Yes, so 4% would still be above the Fed's target, and from historical measures, that is still a little bit of an elevated inflation. So stagflation would really mean just an environment where inflation's higher. It's not like going up, right? So hyperinflation is pretty much inflation going up very fast. Inflation in general is just prices staying above their target and just staying really, really high. And then just the Fed wanted to be really, really balanced, right? They want inflation to be under 2%, in and around 2%. That's their target, obviously. But if you see 4%, 5% inflation and unemployment starts to go higher and economy starts to slow down, that will create a stagflation environment. But then, of course, Kathy Wood and Elon Musk are saying deflation, where prices are actually going to start going down with innovation and everything that the Fed is doing for choking demand. All right, so we'll do a quick audio check just to make sure that you guys can hear this. So give me a thumbs up if everything is working well.
But he's moving forward with a massive wage hike across the board. We'll tell you why and why now. That's ahead on Squawk Box.
All right, was it good? Perfect. A bit too loud. All right, I'll just reduce the volume a little bit. Again, I think it usually does happen. There we go. All right, we should be all set. Perfect. The next time I play it, it should be working well. But we got 7 minutes now. We should be good. Very loud. Okay, I'll reduce the volume next time. I'm just going to bring it down to half. All right, and QQQ right now, 69 basis points higher. Again, we've got the NASDAQ here. We've got the SPY up over 71 basis points. The yields slightly pushing down. And the 10-year yields are slightly down about 0.5%. And the dollar index is also down. So one of the things I wanted to mention is that, so right now we're gapping up from this QQQ chart, right? So we are certainly pushing higher quite a bit. So this is the SPY chart actually, excuse me, this is a SPY chart. We're actually gapping up above 410, 411. So we'll go ahead and turn this level back into a support for the SPY. And the next resistance to watch out for is going to be 417. So, in the past, you'll notice that where we are trading right now, we have seen a lot of consolidation and a little bit of resistance at these levels. So we got a little bit of a rejection there, then we got a breakout. We broke all the way up to 419, 420, but that was the level. That was a level where we really struggled to break out, and then we eventually saw a drop of over 4% for the SPY. So we're back in that range. Again, we have gotten rejected at 417 here. That was a rejection from back in August. We sold off, validated the support at 410, 411, gapped up, and then rallied even higher. So right now we're kind of like in that middle range again, where 410, 411 once again will be a support. Yesterday it was a resistance. We were just not able to break out. Then we gapped up, and today that will be a support, and 417, 418 will be the resistance moving forward. All right, so let's take a look at our poll. All right, so optimistic case, which means inflation would be just slightly better than expectations, is 35%. Make sure that you do vote if you haven't already. We got 5 minutes left. And then next is going to be base case. So the consensus right now going into today's inflation print pretty much seems like we're going to be either meeting expectations or coming in slightly better than expectations. And then only 22% expecting a bear case, and then so that's pretty much it. Over 70 to 80% expecting either meeting expectations or coming in much better than the expectations as well. So, all right, this is exciting. This is really exciting. So we'll see how individual stocks also move. We're definitely going in green going into this print. So can you explain why 2% inflation is what the Fed are aiming for, why inflation is good at 2% levels? So really, what happens is no country, or from a macroeconomic standpoint, no country wants to see significant deflation, and they also don't want to see significant inflation, right? Everybody wants to see a very modest level of inflation where prices go up over a period of time, but they go up in a very balanced way. because deflation means that prices are coming down. They're literally just going down. That's what deflation is in its terms. So what happens is that all of it becomes a self-fulfilling prophecy, right? If everybody here believes that prices are going to go down 1 month from now, then everybody's going to hold off on buying any goods and services, right? We're just going to wait 1 month to buy when prices are lower. And once everyone starts doing that, well, then guess what? Prices actually start going down because there's no demand anymore. And as prices going down, people still expect, oh, prices are going to go down even further, so we might as well just hold off on buying. And that creates this spiral for deflation. Same thing happens for this spiral towards hyperinflation, right? Everybody thinks that prices are going to go higher. We might as well buy today so that we don't overpay 1 month from now or 2 months from now. Again, that becomes a self-fulfilling prophecy where as more and more people do that, that leads to super, super high inflation. So the goal has always been to avoid high levels of deflation and high levels of hyperinflation, and just to balance it out around 1 to 2%, which from a long-term perspective is appropriate for growth for the overall economies. So hopefully that kind of answers your question there. Under 3 minutes left. Michael says, it's been a while since you quizzed us. So yes, I'll do a pop quiz here very soon. We'll do a pop quiz on some of the other items as we go through this inflation print. We got time, Michael. We got about an hour before the market opens and about 3 minutes before we get those numbers to come in. So yeah, we'll do some pop quiz here very soon. One more thing I wanted to mention is that the 10-year yield and the 3-month is the last yield curve. That the 10-year yield is, the one that we look at is the last one that will potentially invert if the 3-month actually crosses above the 10-year. Every single yield curve with respect to the 10-year has been inverted and the spreads are negative, except for this one 10-year versus 3-month, which is still 14 basis points. But this number has been coming down, right? So it's down 47% today. So short-term yields, very, very short-term yields, 3-month yields have been pushing higher with respect to 10-year. And this number has come down from 30 basis points just from a few days ago. And in fact, it's come down from about over 2.2% from just a couple months ago. So we have seen a significant contraction in this spread. There we go. We're now down to 12 basis points. Literally, as I'm talking, this spread is going down. And we might even just turn negative today. Well, we're almost there, 57% drop here for these yields. All right, so about 2 minutes left. Let's just switch over to CNBC here, and we should be all set. I'm going to go over to live, and we are all set. All right, let's do this.
Administration, now an adjunct scholar at the Cato Institute and a fellow at the Hoover Institution. We're going to be ready for the number by the time I get done with this. And our own Steve Leisman spent years in Russia, speaks some Russian, actually, likes pina coladas and a nice walk in the afternoon. And then Rick Santelli, who's also, I think, in the Windy City. So if we go really quickly, we might be able to get a number. Let me just ask everyone, Austin, is it going to be a
for the new month? I think that changes the game of where the Fed's head is.
Tyler, real quick?
I agree with Austin. I'm really going to be looking at the core measure, the headline. We know a lot of the components there dropped last month, so it's probably going to be flat, maybe even slightly negative, but I'm going to be looking at the core.
Sorry, Nancy?
Well, I'll take the over on that since we have a little bit of a consensus. Okay. I'd say above 8.1 is probably likely because of food inflation. I'm really watching food inflation, although energy has probably dropped.
Okay, sorry to be moving everyone along so quickly. Mira, do you have a guesstimate?
All eyes on core. We want to see things outside of just energy come down in this report.
Very good. Okay, and then we'll get to you in a second, Steve. Sorry to leave you out. It's time now for the report. Rick Santelli, hopefully you got the numbers for.
Yes, the August numbers for the Consumer Price Index. Headline number expected to be down is up 1/10 instead of down 1/10. And do remember, the high water mark there was in June when it was the highest level since 2005, when it was up 1.3%. Up only 1/10, of course, is the lowest. Well, since last month, we're unchanged. If we strip out the all-important food and energy, and do understand, gas was down, 26% month over month. It's food that we have to pay attention to, up 0.6%. double the expectation, and the high water mark there is up 9/10. That was in April, and that went back to 1981, up 6/10. Well, if you look at up 7/10 in June, that's kind of our comp. Now, the year-over-year numbers, expecting up 8%, up 8.3 on year-over-year, up 8.3. High water mark there was, of course, 9.1. That goes back to 1981. 8.3 equals April, and it is the lowest level since February when it was 7.9. And if we strip out the all-important food and energy on a year-over-year perspective, it's also hotter than expected, up 6.3%. We're expecting up 5.9. The high water mark there, up 6.5. That was in March. That was the highest since 82. So when we see 6.3, that actually now is the highest since March of when it was the highest since 82. We've had 4 months in a row where it was moderating a bit. We'll call an end to that. Now, as we look at interest rates, we can clearly see that there's a lot of two-way action going on here. But for the most part, we're at 339 and a 10. That's up about 4 basis points. And we were at 329, down 7. So you can see there's been a big reversal. And the panel, of course, is going to discuss this. The thing that really bothers me with regard to inflation is everybody here on this panel agreed months ago that one of the reasons inflation was high was all the government spending. And after we agreed on that, what did the government do? They spent more. Student loans, welfare in terms of the CHIPS Act. Seems like nothing is sinking in. These numbers aren't better than expected, and maybe they should be, and maybe ultimately they're going to start to go back up again because we continue to go back to that well of debt and spending. The gang, back to you.
Yeah, we've had policymakers on, and to there are no exceptions that they don't cop to that at all anymore.
All right, so obviously things turned very, very quickly. Let's take a look at what the numbers were, and then we'll also take a look at the Fed Watch tool. But the NASDAQ down over 2% right now in a blink of an eye in less than 5 minutes here. We've got the SPY down over 1.4. The 10-year yields here up over 1% all of a sudden, all the way back up to 3.4% here. And the dollar index also spiking over 0.5% back up to 108, almost at 109 in fact. And of course, a lot of individual stocks with some deep, deep red candles here. Nvidia down over 3.5%. We got Tesla down over 3% as well. We got AMD down over 2.5%, and we got Apple down over 1.9, almost 2%. So, wow, that was definitely a lot to take in. All right, so 0.1% increase. Again, the consensus was for us to see a flat month, but we didn't get that. 0.1% was the increase. Core did come down from 8.5 to 8.3%. That's where we were. And then actually CPI, headline CPI came down, and core went up to 6.3%. Let's take a look. So once again, we are seeing a little bit of, so there we go, food and shelter really putting a little bit of a dent on the overall inflation print. So those were the two things that, we talked about were kind of like wild cards. Those were two things that really could affect inflation this print. And, one thing was food right over here. That was up 0.8% month over month. And then shelter right here, rents were up 0.7%. And energy did its part. Energy did what it was supposed to do, was down over 10% on a month-over-month basis. And then gasoline down 10.6, fuel oil was down over 5.9, but shelter pretty much, offsetting some of those losses, and food also on the headline print, offsetting some of that as well by going up 0.8%. So those were the two things that really weren't super great. And then we got new vehicles down 0.9%, and then used cars, actually used vehicles so used cars and trucks were down 0.1%, but new vehicles were up 0.8% on a month-over-month basis. So that was the print coming in, a little bit worse than expectations, at least on a month-over-month basis. So if you take a look at the Econ Days assumptions here, and we kind of also want to take a look at the Fed Watch tool to see how the expectations have changed, because I'm guessing it has to be over 90% once the news settles in. There we go, 90% already now. It was at 86% going into this print, and we're now over 90% for the 75 basis point hike. So the expectation would really be that the Fed is going to be super aggressive when it comes to the interest rate hikes. So again, 0.1% too much to add another bar there. It isn't that bad. So it really, I mean, it was the core inflation that's really messing things up in my view. I think it's not so much the headline. The headline, went up by 0.1%. Definitely expecting deflation was a little bit of a reach. Definitely was very optimistic. But a flat month was the consensus. We didn't get that from inflation print. And as a result, obviously, markets are surprised with the inflation print, especially on the core part. How much did we increase on core? All items, food and energy, pretty much here. Let's take a look. So yeah, they went up 0.6%. So for August, you see that 0.6%. That was quite a bit, more than the 0.3%. So I think core was really something that resulted in the markets to pull back here. 0.6% was that number. And year over year, we're now sitting at 6.3. So, and all items going up 0.1%, 8.3. So that was pretty much in line with what the expectations were for CPI. So a little bit lower. So obviously 8.3% was the actual. So if you were to add a new column here, put in actual. So we pretty much went up by 0.1%, 8.3% was the number. And this went up by 0.6%, and this came in at 6.3. So we missed on month-over-month CPI headline. We missed on headline year over year. We missed on month-over-month core, and we were pretty much in line with core year over year. So that was the report, and we got 3 out of 4 misses, and fourth one was pretty much a meet. So as a result, the market's doing what they do best. So, all right, QQQ is down 2.2%. We've got NVIDIA here down over 4% now, under 140. Tesla really selling off, down over 3.5%, just under $294. We got AMD pulling back 3.5%, and Apple also down over 2%. So there we go. Perfect. Oil prices are also selling off. They're pretty much flat. What's going on with crypto? So crypto, Ethereum down over 2.5%, almost 3%, and Bitcoin also down almost 3% here. So selling right back down from 22,700. So it's down about $1,000 right after the inflation print. And the 10-year yields definitely pushing up 2.2%. But the 3-month is obviously pushing a lot more than the 10-year right now. So Oscar says, glad I bought puts yesterday. That's great. Congratulations. And yeah, markets really don't look super great. I mean, it's on the 5-minute chart, it just looks horrible. And we're just continuing to kind of sell off. So the Fed is going to be aggressive. I mean, this is not the print the Fed wants to see. And then, as we discussed, core inflation is going to be the one that's really important. And it definitely came in a lot higher than what we were expecting. Year over year, 6.3% was the estimate. We came in there, but shelter, rents, we've been talking about rent and food. Those are two things that are really kind of getting more broad-based, and they're pushing higher, resulting in overall inflation. Also, even though energy is selling off, right? But rent and food are the ones that are really not stopping now. So there we go. What a great print, I feel like, from the markets. It's only going to give us opportunities, I can tell you that much. Obviously, inflation is still pretty sticky, still pretty elevated. We're nowhere near close to target. Probably will not be for a long time, but market selling off is just in anticipation of even more aggressive rate hike. I mean, I wouldn't be surprised if we actually do get, another maybe even 100 basis point column soon, and for us to see something like, markets to at least anticipate a 100 basis point hike going into like November or December or even September for that matter. But yeah, 89% now. There should be a lot higher, in my opinion. This should be like way over 94, 95%. It should just be like be done with. Yeah, so Jason says rent is ridiculous. I went from $1,400 to $1,800 in a year. I can't even buy a house either. Stuck. So yeah, I mean, rent really is on fire, pushing higher. And we even read that on the Beige book, right? So when we broke down the Beige book, we learned that people are pretty much moving away from actually buying homes to like renting them, and rental activities have actually gone up. So as a result, we are seeing a pretty significant increase in rent. So Caddy, the only problem I see is the dollar has strengthened massively in 30 seconds. Look at your currency. How is it doing? Yes, the dollar going up to 109 now. So it's definitely got a big spike. I'm assuming pretty much all currencies are, with respect to the dollar, are down. I mean, euro is down. Yes, see, so euro pretty much sold off very, very aggressively. We got the Indian rupee. Actually, this is against the dollar against the Indian rupee pushing higher. So again, if you do INR USD, that pretty much had a pretty significant red candle, so that was obviously selling off. Then pretty much dollar strengthened against all currencies, right? Even emerging markets and some of the developed ones, euro, and then the Swiss currency as well, Japanese yen, all of them. So the dollar definitely strengthened a lot, yeah. So yeah, I mean, the thing is that Messiah, hi, I'm new here, all this, and I'm just watching if the rents go up, is this going to be in the favor of the bulls or the bears? Well, if rent goes up, then that's going to drive overall inflation higher. Two things that I think we need to pay attention to moving forward really is going to be rent and food, right? We've talked about how food was going to be a wild card along with rents, because I mentioned I have no visibility on rents and how they're doing, but those were the two main culprits that pushed up overall. CPI, headline CPI didn't come down as much, and then core also pushing higher than expectations and what the estimates were. So those are two things that can be a little bit more sticky, and if they are, then that's gonna not be very great from inflation standpoint, because the Fed is still gonna be doubling down on interest rates, and if they continue to do that, then good luck. The markets are not gonna be very happy about that, at least in the short term, is what I have to say. I mean, eventually something's gotta give. Eventually something will give. It's not even a question of whether it will or not. It will. It's just a question of when it'll start to give in. Whether it's unemployment. GDP growth is already starting to slow down, so yeah, and the markets have not even opened yet, so we'll see how the markets do. Dow Jones is actually down a little bit over 1% right now, so $320. So the interesting thing really was that core. So earlier, what we witnessed was the spread. Yeah, it's pretty crazy. Earlier, what happened was this spread right here widened, right? And this happened because headline was pushing higher and core was coming down. And now what's happening is that this spread is narrowing, right? Because headline is coming down and core is on the move back higher because energy prices went up and they went down. And now other broad-based items are also pushing higher, new vehicles and shelter prices and some of the other things that affect core CPI when you strip out food and energy, kind of pushing higher. So that spread is now narrowing. And of course we are way above target. This is our target. This is where we need to be, like around 2%. So I want to see what exactly within food pushed higher. So again, food overall was up 0.8%. That's the rightmost column that we're paying attention to. Flour and prepared flour mixes, 2.2% month over month. 2.6%, we had white bread pushing higher. 2% increase in fresh sweet rolls, coffee cakes, and donuts. Then we got 4.9% increase in frankfurters. This has been actually one thing that has been going up. It's been very volatile. 5.3%, then 4.5%, then down 6.1%, then up 4.9% on a month-over-month basis. 2.9% increase month-over-month for eggs, 2.2% increase for other uncooked poultry, including turkey. And then we got 2.3% decline in apples, bananas, so some of the fruits here, 2.5% in potatoes. I know it's pretty crazy that you guys have to wake up at 9 a.m., 6 a.m., 5 a.m., wherever you guys are watching from, and just watch a guy talk about eggs and their prices. But hey, the market is pretty much driven on the price of bananas and apples and potatoes, all right? So we gotta pay attention to all these things. But 3% decline here in frozen non-carbonated juices and drinks. So that was a big drop in energy, 10.5%, 10.6, 10.5, 10.6, 10.8, all that. So definitely a big decline. So energy did its part, right? Energy was right on the money, declined month over month. That's that's exactly what we were anticipating. But of course, food is on the move, and shelter as well. So if you come down, so shelter rent of primary residence was up 0.7%, and then lodging away from home 0.1%. So that was a pretty significant increase there. So markets, we'll see if we do get any recovery here intraday when the markets do open. But so let's see here. Yes, so Caddy, but we are happy, aren't we? I mean, we have a lifetime opportunity to buy good quality companies. The only bad thing is that inflation affects people with lowest income. That's true. That's true. And, the way I see it, like I said, there is going to be buying opportunities. That is exactly one of the reasons why, I've personally not been dollar cost averaging. Literally, I don't even remember the last time I actually bought a stock. It's been a while. I think it's been a couple months. I've only been trading options the last couple months here. After raising the cash that we did, after trimming some positions, after raising the cash, because there's going to be opportunities, right? There's going to be quality companies that do, trade at reasonable levels. They come down to our buy targets, and there's going to be opportunities to dollar cost average. We just have to be a little bit more patient, right? Inflation is not going to come down overnight. It's not going to come down in a few months. It's definitely going to take some time for all these things to resolve. When it comes to the interest rates, the overall economy, when it comes to recession predictions, and inflation in general. So, I've only been trading options, been selling puts and calls. That's pretty much all I've been doing for the past couple months here. Really haven't been buying. So, Salisu just joining in. What were the numbers? We came in at really high, in other words, higher than what the expectations were. So the numbers really were 0.1% for headline increase month over month. Year over year, we're at 8.3%. For core, it jumped 0.6%, and we pretty much met expectations on a year over year basis. So Oscar says, come on, my friend. Next you will be agreeing with Kramer. Let's see. So, we'll see if there's any recovery, but definitely doesn't look like there's going to be much, considering, we're down 2.2%. It's a pretty brutal sell-off to come back from. And of course, a lot of individual stocks. Tesla is down to 294 already. And then we got Apple here down almost 2%. Apple's still not as low as, the gains from yesterday. Yesterday was just insane amount of gains, almost 4% increase. But still had a pretty brutal drop here pre-market. Couple earnings I want to go over. Adobe is one. I'm pretty sure they reported earnings already. Or no, I think they report later this week. I think Oracle was the one that reported earnings. Oracle is flat. Wow, it's only flat. It's not really doing much. So we got reported EPS at just over $1.03. And then we got revenue coming in at 11.4 billion. I don't know if I have a spreadsheet on Oracle. Nope, I don't think I do. All right, so Oracle, I'll also do an analysis on them very soon, just looking at the historical trends and whatnot, but let's take a look at their numbers. So no updates on here yet. But yeah, still flat. I'm assuming they were higher pre-market, and then after the inflation print, they're just selling off quite a bit. Yes, Oscar, thanks for reminding everybody. We've got over 1,000 people watching. Thank you so much for your support. Make sure that you drop a like if you haven't already, so that we can get more people involved and more people joining in on our stream. So thank you. I really appreciate that. Trendy says, saving my cash for the next crash. That's great. That's awesome. All right, so if there's any stocks you want me to go over, Adobe looks like they're going to report earnings later this week, and Oracle, I can't find it on TradingView just yet, but if there's any companies you want me to take a look at, I'm happy to go over. Again, we're looking at new ideas, new companies possibly, so that we can continue to expand our watch list, expand our reach, expand our ideas, and then possibly, look at those opportunities in the future. So I really appreciate that. AMD, again, we're down 3.7%, 3.2%, so nothing really has changed from my yesterday's analysis, support level is going to stay put at $72, $75 around those levels. And of course, this is a very, very strong area of demand. And we've also got my fair value sitting at roughly under $60. By the way, if you want to access all my fair values, again, this spreadsheet is available for everyone. So you can come over here, click on AMD. Who asked about AMD here? So Janarthan, you can literally just go to the spreadsheet, click on AMD. You'll have access to all of my fundamentals and the entire financial history of the company. And you can scroll right to figure out and see what my fair value is. So all of that is available on there. And you can pretty much take a look at all the numbers. So let's see here. Amazon and Google support. So Amazon supported around 135 for now. Because I think we're trading, well, now we're trading below 131. So I would say 125 is that support right here. That green, that white line, we kind of fill that gap and then push higher. 125 is going to be that support for Amazon, and 105 is going to be that support for Google. So $105. So Neo, Oleg, that support level is going to stay put at around, there's going to be a big support around $19 to $20, and we've got a big resistance here at $21, $22 per share. So that's going to be the next level of resistance to really pay attention to. I mean, if you come over to the 30-minute time frame chart, you'll notice how many times we've gone rejected for Neo at around $21, $22. So like anything around this red rectangle, 21 to as much as $24, I want to say there's a lot of resistance. Rejected there, rejected, 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 rejected here. So those are going to be some levels to watch. NVIDIA support in the actually we're now under 140. So NVIDIA next support is going to be sitting, I believe, yeah, so down here in the low 120s for NVIDIA. So that would be the level to watch. Right now we're getting rejected at this level. So this right here was a big resistance area for NVIDIA. So we didn't quite fill this entire gap. This is a gap that NVIDIA still has yet to fill. But of course, pre-market we're selling off. So this right here, low 120 is going to be that support. So Caddy, what was the outcome of the 3-year and the 10-year treasuries auctions? Were the yields elevated given for the Fed balance sheet reduction? So yeah, I think they were yesterday. They were completed. I think the demand was good. Again, as the Fed continues to roll off the balance sheet, roll off the maturing securities from the balance sheet, it's going to put some upward pressure on the 10-year yields and just all yields in general. And it is, right? They have been pushing higher. I mean, now we're down to 14 basis points, and this is the last sort of spread for the 10-year yield. So if this one turns negative, then we've got all yield curves against the 10-year yield inverted and all spreads negative. That's not going to be a great sign from a recession standpoint, but you can already see the short-term yields pushing higher very aggressively as opposed to longer-term yields. So we've even got the 30-year inverted against the 5, the 2, the 3, the 6-month, and the 20-year. So all of them are also negative except for 7 and 10 and then 3 months. So yeah, pretty much the entire bond market is upside down right now with all the yield curves. Oh, Ara says 100 basis points is showing up in the FedWatch tool. No way. Is it really? We were just talking about this earlier. That if 100 basis points starts to show up, that would be crazy. No way, I don't believe it. Oh, wow. Wow, we really are seeing all 100 basis points now. That's pretty crazy. We were literally talking about it. Wow, that's incredible. The Fed funds futures, just incredible. So 81%, so 75 is pretty much a done deal, right? So 50 is gone now. It is gone. So we got 19% for 100 basis point, full 1 percentage point increase from the Fed for this September. So yeah, just incredible. Incredible how quickly the Fed futures just priced that in. Yeah. So again, we don't have any other economic data. I mean, the only way I see 100 basis points getting pegged from this 19% going up to 80, 90, almost 100% is if tomorrow's PPI numbers come in really, really bad. I mean, what do we have? We don't have anything left prior to, let's see, let me just bring up the calendar here. So we don't have anything else left from what I know as opposed to the PPI numbers. So again, today was the CPI. Tomorrow we've got the PPI numbers. We've got the retail sales and the Philly Fed manufacturing index, but that really is not going to be changing the Fed's mind. It's not going to be like anything crazy that changes the Fed's mind to, pretty much go with 100 basis points. I think the PPI number is going to be that thing that, you know, really pretty much pushes us to 100 basis points. Retail sales, again, like I said, I don't think they're going to be super important. They are going to be important for the markets, but not so much for the Fed in my view. And then retail inventories, business inventories, all those things. And then consumer sentiment, again, that's going to be the University of Michigan consumer sentiment and the quadruple witching. So from an economic standpoint, there's not really anything else except for the PPI numbers that could really increase the probability for a full 1 percentage point increase or 100 basis points. And of course, the 21st, we've got the Fed meeting, we got the rate decision, we got the economic projections also, so the SEP, and then we've also got the press conference. But this is crazy, absolutely wild. So markets just down 3%. We got to brace ourselves for a really brutal day. Tesla's down 4%. Yep, you're right. We got AMD down almost 4%, Apple down over 2.2, and Nvidia down over 4.6. So back to what 2022 is all about: losses and more disappointment. So Michael, is this a good time to start learning how to swing trade? So right now what we have, Michael, from a swing trading standpoint is that most of the trends that you'll see for most charts are going to be in a downtrend, right? So what do I mean by that? So if you come over to pretty much any chart, right? You look at AMD. So you look at AMD, it's been on a consistent downtrend, right? It's been just been selling off. So this is the overall trend for AMD, right? It's been going down. You look at something like Nvidia, same thing, right? Whenever this thing loads, it's going to be the same trend, right? Same trend. It's been selling off. It's been going down. So the overall trend is certainly down, right? Right? Tesla, same story. For the most part, it has been selling off, although you have seen a lot of volatility. So not saying that swing trading is not doable. It absolutely is, but just know that you're going to be trading against the trend, and you will be pretty much focused on reversal patterns, right? You'll be focused on patterns that show you some type of reversal opportunities, right, per se, because there's definitely opportunity to swing trade Tesla here, 49 to 50%, and this right here, 49 to 50% again. But again, you're just going to be trading against the trend. So that is something you have to keep in mind when you're kind of applying your risk reward trade-offs. You're going to be pretty much focused on those aspects of reversal trades. But you can look at something, that might be on an uptrend. Obviously, energy, XLE, has been on a consistent uptrend, right? So if you take a look at this entire pattern, it's been consistently pushing higher. So this is the exact opposite of what I showed you for Nvidia and AMD. So these are charts that, energy companies, Occidental, some of those that are good prospects for swing trading. But even these but it's just, you're going to be catching up the reversal trends there. So Oscar, honest question, does this not just prove you right, money vesting, have your fair value, and just buy when, if it gets there, totally remove all emotion? Yeah, I think, well, that's the whole reason why we apply margin of safeties, we apply growth rates that are really conservative, because, the way I set up, or the way I wire sort of like myself, is just knowing all the worst case scenarios, right? Knowing what's the worst possible thing that can happen. If I know that, I don't know, there's a level of security, there's a peace of mind that comes with knowing what's the worst case scenario. Everyone's different, right? So obviously some people don't want to hear the worst case scenario because it makes them anxious and whatnot. I totally get that. But with me, it's a little bit different. I like to know what the worst case scenario could be. And if I know that, I'm like, okay, if I'm prepared for that, then anything in between is fine. So that's why my growth rates and my P multiples and my margin of safety is very, very conservative, right? We obviously are going to be always a lot lower than where the market price is because we're looking for deals, right? We're looking for very, very good deals. We're looking for cheap deals. We're looking at stocks to come down, 40, 50, 60%, trade at really low valuations, and that's when we can start to take a bite. So that's where we are with our analysis. Obviously, not everybody enjoys that. Obviously, when you're bullish on a stock and you hear a fair value at 40% lower, then you're like, yeah, screw that. I'm not gonna deal with it. But that's just the way how I operate. So actually, yeah, so we have updated the fair values for the most part for most companies. Again, I do them on a yearly basis. So as 2022 comes to a close, as the companies finally release their numbers and earnings and everything else, then I update them on an every year basis. I rarely do them on a quarterly basis unless the company updates their guidance. So let's say that AMD comes out and guides that, okay, instead of 60% growth, we're actually going to do 75% growth. That's when my fair values will get updated because the company is guiding for more revenue. They will really get updated on a quarterly beat or something like that. It's just going to be if the company guides higher for future quarters and for the full year. And I always do them on a yearly basis. So. So Jacob says, Jacob, who are you talking to? We know that this CPI is not bullish for the market. No, I don't know who said that. Who said that? Oh, okay. All right, I get it. So Tuchel, Chelsea manager. Yeah, I mean, we can talk about that too, but I want to take a look at some individual stocks for you all. So if there's any stocks you want me to go over, again, we're gonna kind of regroup a little bit, talk about some. Well, going into this inflation print, we had over 60% people expecting the markets to be green today. I don't think we need to do the poll anymore because we're pretty red. I don't think we are anywhere remotely close to green now, down almost 3%. So. All right, let's take a look at Qualcomm. So Qualcomm is a stock that we analyzed recently. It's down to 128. That is really good, right? So it's coming down to closer and closer to that green rectangle. Under 120, 125, I think is going to be very, very exciting Qualcomm opportunity, considering the technicals and the fundamentals as well for the company. They have been reporting some very good numbers. We talked about the revenue, the earnings, and their entire financial statements. And these are the estimates for EPS. Pretty much going from 830, this is the forecast again, going to $12.56, $13 and $13.35, and revenue also expected to grow over the next 3 to 4 years. So, and considering all that, valuation is really low, 11 times earnings, 4 times sales, trading at really low levels. Okay, so I get it, Jacob, my bad. And the balance sheet here was the only concern I think I mentioned in that Qualcomm video, was that the cash is obviously a lot lower than the debt amount. So they're sitting on a little bit over $3.8 billion in net debt. So that is definitely something to look into. But from a valuation standpoint, from an intrinsic value standpoint, from a technical standpoint, Qualcomm certainly makes a lot of sense at around 120s or lower. So that's what I would be watching for Qualcomm. Emily, am I going to write a CSP today? I might write another few CSPs. I already got a couple cash secured puts at really low strikes where I'm comfortable buying some of these shares. But yeah, I mean, if it really turns into a brutal day, might sell another one for AMD. I already have one on NVIDIA. I've got a couple on Tesla. I've got a couple on AMD. I'm thinking about maybe writing one on Google with about a $90 strike. Let's see where those premiums are going to be. Again, it's not going to price in the sell-off that we're seeing pre-market. So we might not see the most up-to-date premiums for these companies. But we can just still take a look. So puts, at least 1 month out, October 14th, $90 is going to be about 25 cents. Am I looking at the right one? Yeah, so Google, it's really not that much, but that might increase once the market opens, might go up to like 50 cents or maybe $1, considering how much demand there is for these puts. Also considering the stock is down 2.8%. So I'm looking at Google for CSP, and then I'm also looking at Amazon as a cash secured put as well, although it is really high. So maybe not Amazon, but Google absolutely. Palo Alto Networks is SoFi, did buy. SoFi, I think the best person to talk to, Tony, is going to be our good friend Oscar. He is very, very bullish on SoFi. That's the only stock I believe Oscar owns, but 512, 515, like that, those are around the levels that I'm really watching. It hasn't really come down to that support. So I'm really waiting for SoFi because at $5, it becomes a really, in my opinion, a moderate to high risk to very, very high reward opportunities. So I'm willing to, maybe allocate 0.5%, 1% of the portfolio into SoFi to see where the potential goes, where the execution is for this company. So right now down 5%, but I'm really paying attention to $5.12 around those levels. If and when it comes down, then maybe I'll consider buying shares straight up, or we'll be looking at selling a CSP on this. So Addison, the Fed is pretty much still at 75 basis points, at least for now. But of course, we know that this has opened doors. Today's inflation print has opened doors for a full 100 basis point hike as well. So yeah, 84% and 16% right now is the probabilities. This is 75, and this is a full 1 percentage point. So if we come over to the probabilities tab here, and if you see where we are. So right now there's expectations that we're going to see 84% probability another 75, and then 46% probability that we're going to see another 50, and then another 50 in December. So right now, as it stands, we're pegged for 75, 50, 50 as of today. And that's going to put us somewhere between 4 to 4.25%. It really, what really matters, I think, over the next couple months here, as we get those inflation numbers, is by the time interest rates get up to this level, 4 to 4.25%, right? That's where we're going to be, possibly starting November, because that's the column and that's the row that we're looking at. 4 to 4.2%. By this time, we need core under 4%. We need core under 4%, which is going to be difficult. But if you can get core under 4% by December, by the end of this year, then that spread will be positive. Then interest rates on a real terms will be positive, adjusted for core inflation. Of course, we'll still be negative on a real adjusted for inflation basis, but since the Fed looks at core inflation, we will be positive if core can come down under 4% by December, because we will be at 4% by the end of this year. There's just no doubt about that anymore after today's print. Where's the pop quiz? Yes, we'll do that. We'll do that very soon. I'm just trying to think. What can be the question? So Anthony says, as much as I'm disappointed, I'm also happy to have this buying opportunity. A lot of us here aren't returning anytime soon. Yes, I think that's a great way to look at it. Again, we've been very disciplined, obviously not chasing any prices, being cautious, being optimistic, but yet cautious with the markets, considering that the big picture, the macro picture is still very much unresolved and uncertain, considering everything that's going on. So I think it's important to look at your buy targets, look at your shopping list, and figure out where you're planning on buying some of those stocks, and just see them as buying opportunities, and as opposed to anything else. So the best source says the most dangerous thing is if the Fed pauses or pivots too soon and we end up in a yo-yo like during the 70s before Volcker crushed inflation. Yes, so I think that is true. I think there's definitely that risk that is there for the markets and for the economy that the Fed pivots too soon. That's something that he literally mentioned in his last meeting, Jackson Hole Economic Symposium as well, that the history has told us a premature loosening policy can really cause further long-term harm. So we don't want to do that, right? In other words, we don't want to be too complacent with our interest rate policies and raising interest rates. So that is important. They don't want inflation to be entrenched in the U.S. economy. They don't want people to expect inflation to keep going higher or stay higher and start pretty much making decisions off inflation. That's the last thing they want, and that's exactly why they're going to keep at it. Those are Jerome Powell's words. So that's not a pop quiz. That's more like just an opinion question, right? That's more of an analysis question whether we go down to our June lows or not. Because again, that's not factual. That's not certain. It's just something that people will make an assumption on, right? We'll just make an opinion on it based on the data we have. Cool. Akadi did not get the notification of live on Discord. That's weird. I think that came out a little bit earlier because I scheduled this live stream, so it might have been earlier than usual. But it should have been there. If you go to the videos tab, it should be there. So the June lows, I think, so Tina, I will update the Walgreens fair value as well on the Google Sheet. Just give me some time. There's a lot of stocks that I need to update. Again, I keep reminding people that I'm only one person and I'm trying to get through with all these stocks. I mean, there's a lot of companies that are just, waiting on the pipeline for me to do analysis on, but I will definitely get there. Just September's been a little bit of a busier month, but I'll definitely update those spreadsheets very soon. So, all right, let's see here. All right, so let's see how individual stocks are doing. AMD just not stopping at all. It's still hitting a new low of day pre-market, now just over $80. We got NVIDIA down almost 5%. Let's take a look at where we are on a more broader scale here. QQQs. So we did make a little bit of a higher low, but today's drop is certainly going to be exciting or interesting here. If we take out this support at 290 for QQQs, maybe this week or later this week or early next week, then I think that is going to be very interesting. I think that's going to raise some probabilities for us to retest our June lows. So 290 is kind of like that last level of support that we need to watch. If that gets broken, then I think there's a higher probability that we get down to our low of June, our June low from 269, right? So that was pretty much the low on June 17th. Same thing with the SPY. We pretty much got a nice bounce from about 387, 388. So this right here is going to be that level at around $388. If that gets taken out either this week or next week, then yeah, we're going to be in for a rough ride. Spark, what are the odds of a 1 basis point rate hike? 1 basis point rate hike, there's about 100% chance of 75 1 basis point hikes. I'm pretty sure you meant 100 basis points, so right now it's 16%. But yeah, not 1 basis point, I think 100 basis points, about a 1%. Yeah, pretty much about 16% right now. There's an 84 to 86% probability for 75 still. So will markets further tank when opened? Well, they could. I could see the markets come down at least over 3%, 3.25, because this is mostly going to be institutional volume in my view, pre-market. At that candle, we had over 2.3 million QQQ shares traded in the first 5 minutes as soon as the inflation numbers came out. And for the SPY, we had a little bit over 2 million. So I wouldn't be surprised if kind of retail tags along after the market opens and we see some more accelerated pressure on the downside. But yeah, 3%, 3.5% I think is going to be like a normal down day today. It's going to be pretty brutal. If you take a look at the heat map, it's not going to be great, which we'll take a look at. Yes, Jacob. So inflation in India is also pretty bad. It has been going higher. Prices are up for energy, food, not so much for apparel, clothing, and all those things, but they have definitely been higher for those two things, energy and food. Wow, we're still hitting a low of day. With 15 minutes left to open, we've got still a new low print at $301. Incredible. And the 10-year yields keep pushing higher. We're actually back up. We're almost back up to that June high for the 10-year yields. It's an insane move. Almost at 3.5%. There's a big worry that credit markets are going to get disrupted like a lot, considering everything the Fed is doing with their balance sheet and stuff. Of course, rolling off and maturing securities and just that's going to really disrupt the flow of credit and the interest rates going higher. So mortgage-backed securities, we talked about they have little to no mortgage-backed securities kind of expiring anytime soon. So we only have U.S. Treasuries, which they will be rolling off from their balance sheet starting this month. Of course, the cap's gotten up to $95 billion. So that's putting even more pressure on the 10-year yields, upward pressure and downward pressure on bond prices. So Yeah, Kathy Wood mentioned in her tweets, yep, she did predict that inflation is going to see some big surprises, downside surprises in the coming months, and inflation is going to turn into deflation, which we'll see. We'll see if that happens or not. So far, it's been anything but. So Emine, what do you think about the ETFs that ETFs that implement the cash secure puts covered call strategy and things like QYLD? So we've talked about this on the channel before. Again, QYLD, I think in my view, is primarily for income investors. We've got a couple members, David and other people that have been investing in this for quite some time. They're the best people to pretty much talk to you about this. But this is, in my opinion, mostly for income investors that want to just set aside as cash and generate that 12% annual yield, and they don't want to go through the hassle of trading options themselves, right? But don't expect any growth from QYLD because there's little to no growth for ETFs that are strictly trading covered calls and cash secure puts and that are not really holding any securities for the long term, right? So they're only trading it for the income of the premiums that they're generating. So that is something. Charles River Labs is down over 11%. Really? What? Richard? It's up 29 basis points, unless you and I are looking at different stocks here. So road to financial freedom, yes, I do. I wouldn't be surprised if oil prices go higher in winter if the demand goes up, right? So that is something that I think will be something to watch out for if oil prices start to recover a little bit here. The VIX is up over 4.69%, almost 5%, moving up, almost 25 right now. The pretty much the main changes we saw as soon as that print came out at 8:30 a.m. We had equities sell off. We had the markets, SPY, QQQ also sell off. We had the bond yields push higher very dramatically. We had the 10-year yield pushing up 2 to 3%. We had the dollar index spiking. We had Bitcoin and Ethereum coming down 3 to 4%, and we had oil prices also surprisingly retreating down almost 1%, and we had the volatility up over 4%. So those were the changes, which obviously going into the print, everything was just exactly the opposite of what I just mentioned, and then after the numbers came out, we pretty much just reversed all of a sudden. What are the orange futures? Orange juice futures. Let's take a look at what orange juice actually did in that report. Let's see if we can find orange juice here. Orange. There we go. Oranges, including tangerines. They were up. Tame it, 1.5%. We want cheap orange juice. It was up. Last month it was down 2.1%. The month before that it was also down 3%. But yeah, pretty much other fresh fruits pushing up 0.3%. Apples and bananas were down. So, that's good. But orange juice definitely pushing higher. I want to look at airline fares too. Let's see, airline fares. There we go. They were down 4.6% month over month. So airline fares coming down. Transportation services overall were up 0.5%. We'll take a look at some state inflation as well. I think that's really interesting as well because obviously some states are doing much better than others in terms of inflation. So I'll see if I can break down the state inflation as well. All right, so we got about 10 minutes left till the open. Today is just like one of those days where we see like a dramatic sell-off, then we consolidate sideways, the market opens, we see like another 2 to 3 red candles, and we just consolidate for the rest of the day. It's gonna be like one of those days where we just want it to be over before it even starts. All right, so I'm gonna put the SPY here. Actually, no, this is the actual stock chart. This is Alex says 10 minutes to go. Really looking forward to it. Have you placed anything in real estate ETF or stocks? Over. So yes, I do have a REIT called Realty Income Corp, ticker symbol O. Now this REIT, we've actually done some analysis on this in the past, and I think there's a website called REIT.org or something like. I forgot what that name was, but in that video, I actually went over that website. You can find everything that you need to know about REITs and going back, several decades to kind of figure out how they've performed. REITs actually tend to do much better in an environment where interest rates are going higher. So this is Realty Income Corp is one of the few stocks that actually is outperforming for me right now. It's actually only down 5%, but the dividend yield has been really good. It's almost 5% dividend yield. So far this year, it's paid out some good dividends. So this is one stock that I do still own. It's in my dividend portfolio. But of course, Walgreens is another one that's not doing super well, although it has seen a little bit of recovery, but it's still trading inside this downtrend, right? So still making lower highs and lower lows. So very much selling off. George, yes. So I'll cover inflation for Bay Area as well. I'll pretty much cover it for most states and kind of break it down in a table where it's very clear as to where that inflation is coming from, which states are mostly responsible for majority of that inflation, and then we'll also take a look at food, energy, and shelter prices in those all the states, right? 3 things in all those states. So we'll take a look at that as well. So Caldron, yes, I did talk about CSPs earlier, but I'm looking at only 2 stocks today, like Google at about $90 strike. We'll see what the premiums are when the market's open. Right now, it's not showing me anything. It's only showing me like 25 cents for $90 strike 1 month out. So that's one stock. And then the other one I mentioned was Amazon, but really it's still trading at a very high price. So not really interested in that, but only Google for the time being. How's XBI doing? LABU, it's down 2.8%, so LABU might be down quite a bit. Yep, so down over 8.5%, so just under $10 right now. So buy price for Realty Income Corp, I'm pretty much a buyer at around this support here, $61, $61 right here at this support, and anything under sub 60 down to $56, $57 are going to be 2 levels that I'm really paying attention to for me personally. All right, so we are ready for another red day here. We should add inflation. Let's see this as well. Let's see if we can actually do that. No, those are indicators. I'll figure it out on how to add CPI because we'll just see that number is up quite a lot. So United States inflation rate year over year. Okay, so only up 10%, that's going to be this line. Can you describe your reaction to hearing the inflation report? You didn't seem too good about it. Well, George, that was only because we didn't quite meet expectations or actually beat expectations. Inflation, obviously. So I don't think anybody wants to see higher prices, right? I don't think anybody wants to pay, $6 a gallon or extra prices for electricity or extra prices for food or groceries and stuff like that. I don't think anybody wants to do that anywhere. So obviously if inflation is higher, then that's not great for not just the markets. I mean, the market obviously is secondary, but just in general, the livelihood of the people, right? So that was kind of like the first reaction is that, oh, inflation's higher again. God. So that was the reaction, but then of course, obviously the markets responded in a different way and the market's selling off because of interest rate expectations. But so volatility here. Oscar says plot twist, buyers will show up and NASDAQ will close green end of day. If NASDAQ can close green today, I will do like a 6 to 8 hour live stream. Let's just do it. All right. I'm just going to close this poll. But if the NASDAQ can push over the green territory today, I will do like a really, really long live stream going over a lot of stocks, going over 100 stocks because it's really Guys, it's down almost 3%. We're asking too much of the NASDAQ, okay? Being down from 3% to actually close green, it's insane. Bring out the green mic. I think that would be nice. If the NASDAQ closes green, we'll finally bring out the green mic today. But I don't think that's gonna happen. It's just, it's almost next to impossible, you know? No, it'll happen. I promise. It'll happen. But not, and the mic will come out. In other words, the mic will happen, the green mic will happen, live stream will happen if, of course, that happens. But I don't believe it's going to happen. Prepare the green mic. Swapnell and Caddy, are you still gathering cash or buy? So not really buying still. Haven't really bought in over 2 months. Really haven't been dollar cost averaging at all. Mostly been trading options. So yeah, not really buying at the moment. Still, I would say just, collecting cash, pretty much increasing cash exposure, and at the same time just trading options. So if there's any stocks that I really like, I'll just be selling puts on them and then hedging with covered calls. Yeah, it's really difficult. I mean, the market's to push up to green now. Yeah, good luck. All right, so we are ready for the day here. Only got less than 3 minutes left. We'll see how we trade. And then we got the 10-year yields over here. So Ankur, my next CSP, I'm thinking about Google. Google's coming down. If it comes down to like under 100 and if it comes down to $100 or lower, then I'll be looking at selling a CSP down to $90 because again, if you come over to our spreadsheet, this is our fair value and it's available to everybody. So you can pretty much see, all the fundamentals for the company. It's phenomenal fundamentals, great numbers. These are the compounded annual growth rates. These are all the historical numbers for the last 15, 20 years. And we can take a look at my valuation, which is around, I think, $90 for Google, if I'm not mistaken. So $92 is going to be that level for Google. So that's, those are around the strikes where I would be looking at. It's getting very close. So Xiao, when will I start buying stocks? I did a video not too long ago. In that video, there should be a good pop quiz. I talked about 11 signals, 11 indicators that I'm watching for when I actually start buying stocks. Does anybody remember or anybody watch that video? 11 signals or indicators that I'm watching. They were kind of broken down between macroeconomics, fundamentals, and technicals. Those were the three categories within which we broke down those 11 indicators and signals. So yeah, that was a video. Let me see if I can find it. I'll post a link here. Let's see. There we go. This is the video. I'm gonna post a link here. Signal 12 orange juice price. Yeah, so that's the link if you want to check it out. Kind of broken down between macroeconomics, fundamentals, and then technical analysis. I only watch for traffic signals. Man, you guys are hilarious. You guys are really funny. All right, so here we go. The market's open in 10 seconds. We'll see where the momentum ends up taking us. Yields almost at 3.5%, back up to their June highs. The Dow, the S&P opens to 4,021, so we're down about almost 90 points, down 2%. We got the NASDAQ here. All three indices are going to leave such a huge gap after today. Should be interesting whether we come in to fill it or not. Where are we? Oh, we're further down. Can't even find the NASDAQ right now because we're down to 11,900. This is where we are. And the Dow is down to 31,800. So there we go. All right. off we go. We got the AMD stock down to $80, down about 4.5%. We got Tesla here down 3.5% right now, and then we got Nvidia down almost 5%, with Apple down over 1.87. So I'll open up the heat map in a few minutes once the market settles in to look at the damage, and we'll see how much red do we have to deal with. Pretty much all stocks, the entire watch list is red. Everyone, the stock that's down the least today is down. Here, let me just reload this. Yeah, the stock that's down the least is down about 0.5%, right? Close to 0.5%. Everything else down 2, 3, 4, 5, 6, 7, 8%. UVXY is the only one that's a volatility ETF that's pushing higher. Obviously, it does trade inverse to volatility, pushing higher. So cybersecurity, all stocks down. Okta, Fortinet, Crowd, Zscaler, Palo Alto Networks. We got energy, all of them down, except for oil prices kind of rebounding a little bit. We got banks, all banks selling off. We got Square down over 6%, PayPal is down almost 3%, SoFi is down over 4%, Credit Suisse down over 4%, Wells Fargo, Deutsche Bank down 2 to 3%. FinTech is also all down. Affirm down over 7%, Upstart's down over 6%, and then retailers. We got Amazon down over 3%, down to 131. All down except for Kroger. Kroger is the only one that's pushing higher. Oleg, man, I love the optimism. I love it. You are very consistent. I like that. What happened to CPI asset? So we did come in much higher than what the expectations were. So that's why the markets are reacting the way they are. Semis, all of them down 3 to 4%. And then we've also got the advertising companies, all the advertising stocks here. Digital Turbine down 6%, Trade Desk down 5%, Twitter, Google, Amazon, Snap, Meta, all of them down 4 or 5% here. Now there are some green candles coming in at the open. First 5 minutes, we got some nice green candles. But we'll see if these green candles last, or if we're gonna make a new low of day. What does everybody think? New low of day or no new low of day? Comment quick in the chat before we actually make a new low of day. Are we gonna actually make a new low of day for the NASDAQ? Coming in, new low coming in. Wow, there's just pretty much everybody expecting new low. So M&A, yes, I will be writing CSP on Meta as well, but one of the things I've mentioned before is that my allocation for Meta is pretty appropriate. I'm trying to allocate more towards other stocks. So Meta, as much as I love the stock, as much as I want the stock at lower prices at these levels and trading at very, very good levels, I just don't want to be over allocated to just one stock. So I'm pretty much looking at companies like Google, companies like AMD, companies like Nvidia to kind of balance out the portfolio a little bit better, and those are the stocks that I'm selling puts on. New low, new low, new low. Vitruvius says new high. So anything the housing market will crash. Mortgage rates are obviously going higher. We have seen loan demand also fall off. It's hard to say. I don't expect a full-blown crash from the housing market. I do see kind of prices leveling off. I do think that they are going to stabilize a little bit. They're going to pull back for overall prices. So 2023, in my view, I think if we do enter a recession and if home prices are down, there's going to be a time where both the home prices and the interest rates start coming down, right? There's going to be a time where home prices actually do start rolling over, right? I'm not expecting a full-blown crash, at least not yet. But if home prices start coming down and the US is in recession, then the Fed will have to respond with a new quantitative easing, right? And if and when they do that, they're going to lower interest rates. And in my opinion, that's going to result in mortgage rates coming down. That is going to be your cue, in my opinion, my cue to actually start looking into real estate as well. I mentioned this to one of our members as well. 2023 is what I'm looking at for real estate, where interest rates are lower and home prices are also coming down. There we go, new low of day. It only took us 7 minutes, so 7 minutes. Nasdaq down 3%. We got the S&P down over 2.3. We got Tesla holding up pretty well. We got Nvidia down 4.6. Where's Apple here? I'm looking at the daily chart. 5 minute, it's down to 159, 160s, down 2.6, and AMD also struggling quite a bit here on the day. So if you come over to this chart here, it's incredible how we were, 410, we were 413. I remember we were 413 pre-market. This will go ahead and turn this level back into a resistance for the SPY. We completely just wiped through this entire gap area. So we're going to go ahead and mark this off as a big gap to potentially fill in the future for the SPY ETF right here. And we're also starting to fill in this gap right here. So this has mostly been filled. We're going to cut it down to this if you continue to pull back. But the good thing is that we are coming down to some very interesting support level. So we are inside this green rectangle where 399, 400 is a very good psychological support for the SPY. So we'll see if we do actually get a bounce. Maybe we come down to 399, 400, and then we are going to see if we get a bounce from those levels or not for the SPY ETF. So again, previous resistance, that's the green rectangle within which we're trading right now. And then talking about QQQs here, pretty much entire gap filled. So that's good. We are done with this gap. It's going to move up to this one right here, the one that we just left. It's crazy. We fill one gap, we leave another one behind for the market. So this is going to be the one to potentially come back to for the QQQs. But the bad news is that we're trading below this resistance again, a level where the Nasdaq ETF has gone rejected a lot. So back to a resistance, my friend. We're back to a resistance here. And if we do really see a brutal sell-off in the QQQs, if we continue to see some more selling pressure, then the support down to 293 is what we're watching right here. AKRO is up like 150%. So if it's, I'm assuming it's under $1 billion in market cap. Oh, it's not even a stock, is it? Oh, it is a stock. Okay, 116%. There we go, 460 million. I didn't even have to look at the market cap to know that if it's up 150%, it's not even $1 billion in market cap. But that's good. 120%, that's great. So let's see here. Yeah, Nasdaq down almost 400 points. Yeah, we got the Nasdaq down almost 400 points, down 3.5% here, 3.15%. The Dow is down over 600 points, and we got the S&P down over 100 points. So weekly and monthly charts, let's take a look. For the Nasdaq, we still have 11,600. 11,000 pretty much. 11,000 is going to be the one to watch. That is still pretty intact from a long-term trend standpoint. And if you take a look at this entire trend, we've talked about it on the channel, but very, very strong support for the Nasdaq. We haven't really seen a breakdown yet, but a breakdown below this 200 SMA would really, really be brutal. Hate to say it, but that is the reality, because we haven't really broken down below that 200 SMA since the Great Recession. The last time we broke down was back in 2008. So we broke down, then we recovered, then we have been consistently above this 200 SMA on the weekly time frame. For the S&P 500, I believe it's the same story, but we did break down below the 200 SMA during the pandemic. Let me see if I can bring up the 300 simple moving average. So the 300 is also, we kind of broke down below the 300. Yeah, we broke down below the 300 as well for the S&P. So it won't come as a surprise because that happened during the pandemic. So those are going to be some levels: 3580, 3250, some of the levels to watch. 5 hour live stream if it breaks. Well, 5 hour live stream, 5 to 8 hour live stream if the Nasdaq can close green. That was the deal. If the Nasdaq or the S&P, one of them, closes green today, you guys got an 8 hour live stream from me tomorrow, where I will literally just go live around like 3 in the morning and we'll do it all the way till like 11 in the morning. Or I'll go live at 2 in the morning, we'll do it at 10 in the morning, because that covers the market open and then 30 minutes after the market opens as well. That's good 8 hours. Man, I will be just exhausted if that were to happen. Kevin says including bathroom breaks. Yes, I'll just take breaks in the middle. But yeah, individual stocks not doing super well either. We're seeing a lot of weakness. Let's just see how we are doing with the Fed funds futures, and we'll also take a look at the heat map and what that looks like. Still not updated yet. I think we need to wait like another 4 minutes because I think it's delayed by 15 minutes. But this is going to be that projections: 82% for 75 and about 18% for a full 100. Nobody said you can't sleep on a live stream. Ryan says you're that confident. Yeah, pretty confident. I mean, it's really, once you get the interest rate projections to get flipped like that, you know, you pretty much get ruled out for 50 basis points and you get like 75 and 100. I mean, now like second guessing myself, but no, I don't think it's gonna, it needs to go up a lot in order for it to turn green, right? If you take a look, it would literally need like an intraday gain of over 3%. Of over 3% after this print. I don't know. It's possible. Anything is possible. But Tesla really doing well. Tesla recovering. It's only down 2.7%. Kellen says I'm buying today after lunchtime. Let's take a look at silver and gold too. Just giving everybody updates on the commodity market if anybody's interested. But silver here has been, in a very range-bound pattern. Right now, just hovering around $19, $20 per ounce, I believe this is. Yep, per ounce. So this is a level where, we have gone rejected in the past for silver. This has been a big key area of resistance at $18 to $19. Resistance here, rejection there. And right now we're just kind of bouncing off of these levels of support for silver. So $21, $22 is going to be that next level of resistance to watch for silver. All right, you know what? It may not be as one-sided. Let's just do a poll. Markets today. We'll do it after the print and after they're open. Green, red. We'll just do that because there's no chance we're closing flat. We'll just do green or red. We'll just do this poll. We'll see where the sentiment really is, even after this print, and how the markets are doing. Brian says, trap, watch out for the next 2 hours. Well, AMD is hitting a new low of day. That almost breached $80. Apple here, 160, just under 160. And, entire watch list obviously is really, really red. John, I just wanted to keep it to options, that's all. Just wanted to keep it to options. So green and red, pretty much. All right, let's take a look at fair value, the heat map over here. Still not updated. There we go. There we go. Finally, something. So I want to take a look at the full stock market. So this is not just the S&P 500 now. We're looking at all the stocks in the market, right? So we've got something, APCX, so App Tech Payments, up 5%. It's a very, very small green candle, green rectangle over here that is pushing higher. But everything else, communication services, you got semiconductor, software, information tech, financials, credit services, you got consumer cyclicals, industrials, real estate, energy, materials, everything. Not a single sector. LNG, I know somebody mentioned LNG earlier. Yeah, I remember somebody mentioned LNG earlier. They're up 1.8% on the day. They're the only energy stock that's actually pushing higher. Everything else is red. Everything. It's pretty much a broad-based sell-off. So it's not even, yeah, Nick mentioned it. So thanks for mentioning that. So it's a broad-based sell-off. You don't have any stock that's up like over 2 to 3% except for APCX, AppTech, whatever that company is. But all sectors are down, and we're seeing a pretty broad-based sell-off here. All right, so quick take on the poll here, and we should be all good to go. So 81% expecting, wow, 20%. I'm kind of surprised, but 20% is really good in terms of the expectations for a green day. That would be like a 3% intraday rally. So we'll find out, of course, soon enough. So, all right, thank you so much, everyone. I really appreciate it. Thanks so much for joining. I know the inflation print was not what the markets wanted to hear, investors wanted to hear, but obviously there's going to be opportunities like these. We have to be prepared for the bigger picture, which is the more macroeconomics, and of course understanding all the uncertainty related to interest rates, inflation, and the recession fears and all that stuff. So we'll be looking at some CSPs today again because of the red day, and we'll be looking at selling some cash script puts, possibly on Google. I'll take a look at the premiums here shortly after the live stream and see if there's any opportunities there to sell a cash script put. And then also we'll be looking at some covered calls as well that I can close on for profit. So thank you so much for joining. I really appreciate it. Honestly, everybody just kind of joining in at 8:30, 8 a.m. Eastern to kind of check out the inflation report together is something that's really good, really special. So I appreciate that. Make sure that you drop a like and of course subscribe. And make sure to subscribe, by the way, so that you don't miss out on any future live streams. And as always, the link to our Discord, Patreon is going to be down in the description below if you want to join and, of course, be a part of our money investing community. All the updates, trade alerts, options alerts, Google spreadsheets, like these that I just went over, are going to be available for everyone to access, along with other PDFs for download and market updates as well. So thank you so much. I really appreciate it. Hope you all have a great day. And I'll see you guys first thing tomorrow morning for the other inflation print. That's going to be the PPI report. So take care, and I'll see you guys in the next video.